About to go live.
Right, away.
Good, we are live, so welcome. Kia ora, ngā mihi nui ki a koutou. Ko te wiki mō te reo Māori. No mai haere mai ki te hui Maoriko o te Homi Tofiro. So it's Māori Language Week. Welcome to this online seminar about sustainable investing. This is our 25th seminar in our weekly seminar series, so just about hit the 6-monthly mark. And you can see the other seminars on our website, on the events page. The last few weeks we've had some great ones. We had Matt Winneray from CEO of New Zealand Super Fund, followed by James Shaw, Minister for Climate Change, followed last week by a really interesting panel on gender and investing. So tonight we're going to have a discussion for about 20 minutes, and then we're going to open up for questions. Please use Zoom chat to make any comments or to ask your questions, or the comments section on Facebook. And you can do that at any stage as we talk. When you think of it's good, and then we'll come to the questions and we'll put those into the conversation. So without further ado, tonight we're discussing Te Ao Māori approach to investing with our very honoured guest, Tem Hall. So a very warm welcome to you, Tem.
Kia ora, Barry.
So Tem is of Ngāti Tūwhare Toa and Te Arawa descent. He's been involved in asset management and investment advice since 1994, and he doesn't look nearly that old. Tem is an authorised financial advisor and a chartered member of the Institute of Directors. And he's been involved in governance for many years. His previous roles include CEO of Tūwhare Toa Settlement Trust, and he's also been the chair of the Federation of Māori Authorities. So hugely experienced, and we'll talk about some of his previous experience during the seminar. But where we're going to start off is what Tem has been doing recently, and that's setting up this kind of what I think is hugely important and innovative fund. It's called Tahito. And it's a really a good model of integrating Te Ao Māori values into an investment fund. So Tem, over to you to give us some background about Tahito and kick the conversation off.
Kia ora no. Tuatai me tautoko tō mihi ki tēnei kaupapa te wiki o Te Reo Māori. Nā reira koutou mā kua tatu mai ki konei, I rungi tēnei tupurangi mo te kaupapa te pōnei nau mā hara mai whakatau mai. Ai kia nei ko tai tonu te hiringa e kakai ai tāne ki tiki o rangi ko te hiringa o te māhara. Nā reira kimi hea te akamatua kia wheterere ake ko te kauai runga, ko te kauai raro. Kia tā whia, kia tā maua, kia aitai roto. So just to again also acknowledge that it's the Māori Language Week. And that was a little snippet from a old oriori, which pretty much says to elevate yourself past your physical into the spiritual or intangible realm. You need to, it's the elevation of the mind. So find that vine that stretches from the heavens to the earth and climb it to its height, and affix yourself in that mode. That's literally what that said. So kia ora everyone.
What a fantastic whakatauki.
Yeah, it's just stealing from old knowledge, and effectively that's what Tahito is about. The word Tahito actually means old, if you look up what it means in the dictionary, but it actually refers to a period of time. There was what we call te ao Tahito, and it's a period of time that existed prior to the arrival of our ancestors to Aotearoa. Because it was before that, there was te ao Tupua, te ao Tahito, and then we arrived here, and that became te ao Hau or te ao Marama, or the New World, because we had to sort of reset stuff. But the knowledge set had been amassed through thousands of years of observation of astronomy, and a lot of people miss the star piece, the astronomy piece, and then of course nature. And what's happened in more recent times is the revival of the Pacific navigation pathways, and that knowledge set has unlocked this knowledge that's been there for a long period of time and given it credibility, because it's been acknowledged now that that science that went with that navigation is, it was probably advanced for its time. So that's and just with the transition, I suppose, as the world moves towards, I suppose, a more state of harmony and connection, because this is all based around connectivity. It's given us a platform to start applying this Indigenous knowledge, because what we're effectively doing is we're taking our Indigenous Māori world knowledge set and we're applying it in a unique way to measure companies. And of course, we're combining that with financial analysis, and we're integrating it with the ESG. So we're adding it's underpinned by a set of values. And of course, that values comes from, again, thousands of years of history. It's captured in what we call Whakapapa, or genealogy. Now, I suppose what makes Māori quite special and quite separate even from most other Indigenous cultures is that we have a genealogical connection that goes beyond the physical and beyond people. And not many other even Indigenous cultures can actually map that through a genealogical connection. And so what that Whakapapa is where the knowledge is contained. It's just that nowadays there's only a handful of people that really know how to unlock that knowledge set. I sort of liken it to blockchain. Every generation was a block of data, but unless you've got some special algorithms, you can't actually unlock that data. And there's only, unfortunately, there's very few people that have retained this deep knowledge, but it's now been recorded and taught, I suppose. And that's a lot of the universities have now becoming the bastions of this knowledge set. But we're trying to take it past academia and we've applied it. And because what that genealogy effectively does is it connects us to everything in the world around us. It maps it's our creation narrative, and it maps our Indigenous blueprint. So what we've drawn from these set of values, it's actually, we call it collective self-intelligence, looking for a sort of description, because it's just saying everything is interconnected, nothing exists of itself. And when you view the world through that lens, you're now looking at it through a Māori worldview or an Indigenous worldview. And part of what we're saying is it's arguably the loss of connection that underpins a lot of our issues, from climate change through to loneliness. So it's sort of the base of that principle that we've built this fund, or we've applied these values. Effectively, we're measuring behaviours. Again, it's on this principle that you actually have to think good to then do good. And so when we partnered up with the investment services group, which is JMI Wealth and Devon, is a group of financial companies there, financial services companies, they were brave enough to allow us to build this fund, or build this financial service based on our cultural values. Because it was a bit of a gamble. We were unsure exactly how this was going to land, and that we could end up with just some freaky little investments that were all edge of the plate stuff that no one was interested in. But it took 2 years to pull this all together and to develop the framework. But effectively, we managed to find an interface between a set of values or behaviours. It's sort of hard to rattle them off over this sort of forum, but essentially it's about consensuality, it's about balance, it's about reciprocity, it's about harmony. Our values and ethics sort of follow nature's model. So it's about making sure that it's circular. What is good about where the world is moving? It's actually coming closer to our worldview. Circular economy and those sorts of principles now, finding regenerative behaviours are all fairly consistent with these behaviours or these values that we have. So we managed to then find a number of measures, and by default, more so than plan, we ended up with a positive screening system. We do some negative screens up front. There's certain sectors that we're just not going to like. Anything that sort of rips into Papatūānuku or that digs into the earth, we're going to frown upon unless they can demonstrate quite categorically that they can return that piece of land or the area that they've disturbed back to its natural form, which most of them don't have that ability. So fossil fuels, of course. Then you've got all your sort of sin stocks. They're easy. I mean, we've been Indigenous cultures around the world, not just Māori, have been plagued by those for a few generations now. So it's easier to take out your alcohol producers and your cigarettes and gambling and those like. So those are sort of the social, ethical type exclusions. From there, we've got 50 different measures. Half of them are ESG integrated. So the way we integrate with ESG is on a values base. So we've selected the ESG data that best aligns to our values. And so we get a quantitative score from that. That's our sort of first stage. Then following that, we'll do a qualitative assessment. So it takes quite a bit of work. That's part of the reason why we started with a Trans-Tasman fund. So our initial fund is wholesale, it's Trans-Tasman. The name is called Tahito Te Taiorehua Fund, which the Taiorehua, if you didn't know, is the west coast sea that stretches between here and Australia. That's its original name. So we've, instead of saying it's Trans-Tasman, where after that fella Tasman, we decided to take the original name, which sort of implies the same thing, but we've got Trans-Tasman in brackets so people don't get confused.
Yep. So Tim, just interrupt, in case there's anyone in the audience, I kind of recognize a few people's names here who know the terminology really well, but ESG, when we're talking about, is environment, social and governance factors, which is a kind of terminology and a methodology used a lot in the investment community, primarily to measure financial risk. So it's interesting that you're applying those factors along with Te Māori factors to essentially the portfolio formation, eh?
Yeah, and that was a key point you've just made, Barry. ESG doesn't actually tell you whether it's a good company or not. It just tells you that they're very good at managing their risks. So you can get a AAA rate, ESG company, but it could still have fossil fuels or could be doing stuff that's actually, not really great for the environment, for example.
Yeah, and there is it's an important point because I think this kind of in a way goes back to your issue about behaviours and the core values, and it's really great that Tahito is formed on the basis of values rather than just a kind of a modification of financial return. So it does give you quite a different perspective.
Yeah, and one of the things we had to prove in our development phase was that you could do this and still get a competitive return.
Yeah.
Because otherwise it's just out there and it's airy fairy, and because it comes from quite a different space, we had to make sure that there was credibility and that the industry still comes down to trust and reputation. So we had a good partner which already had that. So we had to prove to ourselves that this was going to work. And in our back testing, it showed quite a good alpha, or good margin over the index. We've now been live with this fund for coming up to a year. At the end of this month, we've for 12 months, so we'll have a bit of a birthday party. And since inception, we've done 3.5% above the index, wow. And which is consistent with the back testing we've done. So not only can you invest in companies that are applying their capital well and are very good around dealing with their climate change, their waste, all the sustainability measures, as well as as best as they can, the equity and diversity issues. They're a bit harder to measure. We've found those, that space. But another big component we look into, because that's important to us, is community. So there has to be give back. They won't make it into our portfolio if they don't demonstrate and monitor their what do you call it? Like the charity piece. So a lot of the good companies, they'll have their own foundations, or they'll have systems set up to be able to give back to the communities that they touch upon in all sorts of different ways. I mean, your simple ones is allowing your staff to go and work out for community good projects, and dollar for dollar matching with staff for grants. But the really good companies are quite structured and quite purposeful in how they benefit the communities that they're involved in. So that's a big part. I mean, a lot of the stuff can be greenwashed. People can talk communities, and really they're only talking about their internal community within their own business. So externalities is a new word I've learnt in the last few years, because effectively that's what we're measuring. We're measuring factors outside of just their business themselves, and they have to show that there's a willingness and an intent to actually care for more than just the internal business factors and their relationships, but go beyond that.
Yep. Tim, can you give us a sense of some of the companies that are in the fund? What kind of companies meet the threshold and both negative screening and the positive criteria?
Yeah, there's at a very broad level, there's a couple of sectors that sort of lend themselves to this approach and this thinking, and that's the big property companies, and then the health sector. So I'll just start at a sector level, and what we've found is, I think they're thinking around this. Well, health is understandable, long term about the people's health, and then having a healthy environment. So they've been on this journey, I think, a lot longer. And of course, the real estate or property sectors, green buildings, managing waste, and this planning and thinking around communities and how they impact on the communities where they're building. It's been in their vocabulary and in their planning and strategy thinking for a lot longer. So they're a lot more advanced. I mean, it's still very easy to greenwash this, because if you're in those industries, you pretty much have to be thinking and operating with that front of mind. Otherwise, you're getting left behind. Sustainable building products, how you deal with your waste and how you reduce your waste and energy reduction. So they're quite advanced. I mean, of course, in New Zealand, we've got our gentailers with clean energy so they quite easily get through the first phase of the screening. When Meridian caused us a bit of concern. We're still waiting to see what the outcome is. When they did that, they allowed that water to flow, and sort of, that ethically they'd sort of crossed our line.
Yeah. Not a great look. Yeah.
So it's not just about the fact that they might be very good environmentally and create clean energy. They then have to behave in a good way. I mean, the banks we struggle with the banks. We've had huge debate. They're sort of the best of a bad bunch, really. Again, it's a lot of it is historical ethical behaviours. but you can find the ones that are generally trying to pull their socks up and behave better and become better corporate citizens, I suppose. So in New Zealand, we've said Mercury, Kathmandu is good. We like Kathmandu. They're a great company. They've gone quite deep now into their supply chain and making sure that there isn't slave labor and that there's equity and.
It's great. We've got Kathmandu coming on to our seminar series in 2 weeks' time, actually. So we'll dig into that story with them. Yep.
In Australia, there's the likes of Brambles. We find them a very good company. They've just come out the other day and says they're now 100% sustainable forests across all their products. They've got pretty aggressive targets of becoming carbon neutral. So, and globally, you're always going to find faults with any company. There's no such thing as perfect, but you can look into their structures, into their policies, into their values, into their purpose, and to see whether they do have a genuine intent in doing good. And without giving the game away too much, it's as simply as looking into their, say, code of conduct and say, well, do they actually talk about the communities that they impact upon? Do they talk about the environment, or is it just all internal about whistleblowing and disclosures and health and safety and all? So once you sort of get a nose for it, you start to, and you understand the value set. This everything is interrelated, and you're not. Have an aggressive adversarial, just focused on internally focused bottom line approach, that you are actually genuinely concerned around leaving the world a better place effectively, or moving towards dealing with these global issues that we're facing.
Yeah. Tim, we've got a couple of questions come in. So let me ask the first one. Hini Tito, thanks very much for your question. Hini uses Chezzys to invest in and finds it very easy and accessible. Would you consider working with Chezzys' platform? I guess might be useful, Tim, for you to explain that you're wholesale at the moment. Hini says it's preferable to invest with value-based portfolios, but with flexibility to put in small amounts.
Yeah. So, unfortunately, we've started off as a wholesale high fund, and that was just because of ease of getting this standing up our first fund. But we certainly have intention to go retail once we sort of get to a level of comfort that across our shop we can definitely go retail tomorrow. That's not an issue, but we just wanted to prove a few more things to ourselves that the large investors actually could see merit in this highly ethical, highly sustainable fund, because we're one of the few funds that are across this line. Most people are sitting back there doing negative screens. They're avoiding harm. They haven't crossed this sort of invisible line into actually doing positive benefits and measuring companies to that effect. But yes, I think Chezzys is a great platform. And then what you're also doing, Barry, Mindful Money, I think we're getting quite a movement into the space. And one day we will be structured so that we can do retail and then go on to Chezzys. So that's in our medium-term plan.
So Hini, you could also have a look at Mindful Money's website, www.mindfulmoney.nz, and we've got ethical funds on that platform. But we've also got a way you can have a look at the portfolio of any fund in New Zealand, any KiwiSaver fund or any retail investment fund. You can go into it and see what kind of companies you'd invest in. So it's a free website, and you can use it to also make an investment with the fund of your choice. So you might want to check that out. And at the stage that Tahito goes into retail, we'd certainly be love to talk to Tem, about them potentially coming onto the Mindful Money platform. Trish has asked a question. This is Trish Davis from Waitomo. Ngā she notes you've always been a leader in that area. So she said, for hapu who want to learn and catch up, what's your advice? Have you heard about the Te Puia Tapapa Fund?
Yes, I had, with my iwi hat on, I had some involvement in that early on. And I mean, there's a number of Māori collective initiatives. That's probably the one that was quite high profiled, because that was a big signal, I suppose, to the financial markets and the investment sector, that Māori are very much strong players now in shaping New Zealand's economy. And I mean, arguably, we're going to continue at a growth rate that's faster than every other sector, purely because of our collective base on how we think and how we operate. So yes, familiar with Te Puia Tāpapa. Whether they have I mean, I'm quite critical now around this, what we call kaupapa investing frameworks, which kind of, since we've developed these sorts of things, we're not the only ones that talk in that, with that sort of language. In other words, it's the closest is impact investing. We get branded as impact investors, which we try not to get boxed, because this is sort of what the industry does. So now you've got positive screens, you've got sustainable themes, you've got impact investing, and we sort of fit all those boxes. But when you take a holistic, interrelated approach, boxing yourself sort of under, sort of breaks down the bigger philosophy of what we're trying to do. So there's still some room to go. It's as new as impact investing is to the financial markets. We are still going through a development in how we properly apply our cultural values into our decision-making frameworks. And so, but the intent is there, and it's certainly I think at quite a quick rate now being applied. And again, with the industry moving the way it is, it's supporting these Indigenous values-based approach, or, as I say, kaupapa, or purpose. Kaupapa is just a strong purpose, strong conviction, has all the ethical and sustainability principles tied up within it.
Yeah. So it's very interesting to hear about that difference between the kaupapa approach and an impact approach. For the audience, an impact approach in the investment world, it usually denotes a intentionality to do good in the world, as opposed to just avoid harm. So it looks for positive good, and generally, in order to fulfill the criterion, you should be able to have demonstrable and measurable performance that shows a good impact. So it's not just enough to be vague about we want to help the world. Actually, you have to be able to show it through the actions of your company. Most of those opportunities are small companies or small enterprises, and they're not listed companies. So I think one of the interesting things about Tahito is Tem, that you're taking it into the world of listed companies with the larger companies, where you're looking for some of those values in what's often quite big corporations. So it is a different challenge. Let's have another question. Ariana, thank you for your question. Ariana asks, thanks for sharing your pakanga. Are you using any long-term intergenerational measures for assessing businesses?
I mean, we'd like to think that all our measures are long-term intergenerational. The financial analysis piece, I mean, everyone does that. And, we'd like to think we're as good or as competitive as every other investment house, institution when it comes to assessing that side. We do lean towards the longer term measures, but our Indigenous values measures are very, very much intergenerational. Everything's in development. I mean, we've, as I said, we've got about 50 odd measures that we use, and we're seeing the change now as companies do get better at measuring their impact, measuring their, the environmental, social, and governance. Those are the ESG factors. And as they do get better, we will just keep increasing our bar, so that it's always a challenge. So that's how we'll keep moving, down through the timeline, I suppose. But yes, it's difficult without work putting up our whole process and working through it in detail to see how we do apply the measures and how we do think long term. I suppose when in industry speak, we're not going to roll the portfolio. We tend to hold on to these companies for long term. We're looking for sectors that are going to not get easily disrupted. Sectors and companies so in doing so, they're embracing technology and they're open to change. Because if you don't have good governance and good management teams that can quickly adjust with the world around them, they'll get left behind. And we've seen that. We've seen the S&P 500, for example, the number of companies that have fallen out of that over the last 20 years. That change is quite rapid. The growth of all the technology stocks. So we do try to look for long-term investments, but at the end of the day, we still want to protect and preserve that capital. So if we think companies are no longer keeping pace in their sector or no longer performing, not just dropping off in as far as their values and ethics go, we will certainly move out of them and move into other companies that are doing better.
Okay. We've got probably time for just a couple more questions. Henny's interested in the psychology of spending and saving, and he basically asks that a lot of people live paycheck to paycheck. How do you kind of instill a savings mentality and change mindsets that can have developed over generations?
Oh, geez, that's you want to get all very philosophical when you go into that space. But I suppose to try and keep it on the ground, I think educating people when they're young, educate them. I mean, I've always professed the view, and with the fact really, that money in itself doesn't actually have any value. It's really just a store of value. So while you can get lost in the complexities of derivatives and swaps and options, all those financial products that are out there, at the end of the day, it's still got to come back to something tangible. And we've seen what happens when you move away from that, and that was the GFC 10 years ago now, 10 years plus. So educating people properly around finance and where it sits in the system and relative to each other, and having kids mindful of that stuff, because it's not going to go away. We can you can go all sort of hippie and think we can go back to communities and self-subsistence. And the interesting thing about COVID is it showed us that again. It was an interesting time because everyone now cared about their neighbours. And particularly in our Māori environment, our maraes back home become the distribution points. We were putting together care packages, and everyone was contributing to help out, not just Māori, we were helping out the community.
Yeah.
And so it was a very strong feel, strong sense of what was probably old community-based, self-subsistence type frameworks. And a lot of our thinking now with our investment across some of the industries or some of the Māori entities I'm involved in is now mindful of if this happens again and it's worse, how do we actually feed our people? So you do come back to their basics, but I suppose coming to the question, educating people young and teaching them facts and not and getting the expectations right around where money sits in the system and where this value is. I mean, I've got quite a strong view. I think it's the equity issue, or literally the inequity, which is one of the biggest issues that we're going to have to overcome to really reach this state of balance and harmony with the world we're dependent on. And while we have huge disparity in wealth globally, all our other efforts are going to fall short.
Yeah. Thank you, Tim. And that's probably quite a good note to finish on. We try and keep these seminars short and sweet. And I hope you've enjoyed it tonight. I'm really grateful to you, Tim. That was I learned a lot, and I'm sure everyone else did. And we have a lot of appreciation for what you're doing through Tahito Fund and all of the other initiatives you're involved in the community, well beyond the investment world. So thank you very much for your work, for your mahi.
Yeah, thank you, Barry. Thanks for allowing us to participate. And of course, it's a great, we're all on the same journey,
Cool.
trying to make the world a better place, I suppose.
Great.
For future generations. Thank you.
Cool. So next week, everyone online, we have a same time, 7 o'clock on Wednesdays. We've got a panel on investment in the environment. So I'm going to be joined in discussion by Kevin Haig, CEO of Forest and Bird, and John Berry, who's head of Pathfinder and CareSaver funds. So please join us. A reminder, you can see all of the recordings of tonight and the other 25 seminars so far on the events page of our website. I want to put out a thanks to the sponsors who made this seminar series possible. Those ones listed down the bottom: Booster, Harbour Asset Management, Generate, plus also other sponsors including Devon Asset Management, Milford, Kiwi Wealth, AMP Capital, and Mercer. So we're very grateful for their support. It's been huge help in putting on these seminars, and we're going to be running them for a fair bit longer. So thank you all. Kia maia, kia atawhai, kia kaha. He waka eke noa. Be bold, be kind, be strong. We're all in this together. Ngā mihi nui.